biggest change that we've got coming in 30 years is the new 1003. Everybody in my office has been ragging on me for 5 years because I've been like, yes, this can be pros and cons for everybody involved. I'm going to give you every reason why, but more importantly, on the agent side, why you need to get your consumer to the loan officer quicker. And on the loan officer side, why you need to step up your game, because there will be quirks worked out all throughout the year. And you may be a little bit more involved with the consumer right up front. So first change, we are going from 4 pages to 12. And honestly, we're going from 4 to 9. However, the 4 pages that we work on right now is only really 2 as far as the consumer. The other 2 pages are pretty much ours. So if you're looking at it, it's going to look pretty frightening to the consumer that they're going to actually fill out 9 pages of information, but they aren't. So, and we'll go through that and I'll tell you why. But it's actually 4 pages to 12, and 9 of them for the consumer and 3 pages for us as the lender as well. And we're going to do both tonight. So I'm going to try and roll through it, and we're going to go over all the information and the pros and cons, the whys, why not, and try and keep me posted as far as you guys chat, any questions that you guys have. You can also raise your hand. I'm going to try and keep that up as well too. Let me go back to my chat bar and put it in the right place. So that way I'll keep you guys going and I can see. The first page of the application, well, first I'll go real quick through the changes. The borrower's information, if you're a loan originator and you're on this call, the borrower's information is going to be 1 through 9. And then we're going to go over that in full, and then we're going to do our lender information second. But the borrower information itself is changing drastically to where when they go in, it's going to be way more interactive. It's going to be a lot more information that they're going to plug in. And will this PowerPoint, I can send out the PowerPoint, absolutely. We can send it out to everybody. So you have the 1003 and the PowerPoint. So you guys can use it for your agents, you can use it for yourself, or the consumer can use it too. It's for everybody. So on the first section that we're going to go over on the new 1003 is section 1. Everybody's going to find this a little different than what we're used to. The first thing you look at our application currently, when we look at it, is like, what loan are they applying for? FHA, VA, conventional, and we always had the case number up there. The borrower doesn't know what the case number is. The consumer doesn't know what the case number is. So, but now it's up there, lender information, to put that case number in there, not the consumer. So keep in mind, the past 30 years, this was made for us to take the application with the consumer's help. So we would do it by phone, face-to-face. Now it's going to be way more interactive for the consumer. So it's going to help them drastically. They'll get through a pretty quick 9 pages, but you need to know the information that's changed the most, and that's what I'm going to go over. So when we look at the first page of the application, you can pull up on the Fannie Mae link itself, or it's right here on my slide. The section asks about your personal information, your income from employment and other sources such as retirement that you want to consider qualifying for this loan. Now, where'd my chat go? I moved my chat, sorry. Because this is going to be one I know I'm going to get some loan officers saying something that just keep in mind, everybody's on the chat here, but we need to get through this. Name, information, the first thing they come to is name. If you don't have a conversation with your consumer that the application has changed and what has changed about it, make you some bullet points, because you want to make sure that 1, they're properly filling it out, 2, they're not making more work for themselves and for your processors, and that they understand what they're supposed to be putting down, meaning what information derives for the application and for credit. So the first thing on the personal information right here, the first thing that sticks out to you guys is name. Alternate names. We have never had to put alternate names on an application before. Your underwriter asks you for 500 alternate names because it's on your credit report. But right up front, we don't get that information. List any names by which you are known or any names under which credit was previously received. So for my ladies out there that you've been previously married or anything else, would you put both names on here? Yes or no? Thoughts there? Guys, I've had a few bars lately that the guys have actually changed their name. So your first underwriting step is 1A, divorce degrees, separation agreements, whatever else we need to know why they changed their name. So alternate names, it's your first underwriting step, right? That you're going to collect from them. Social Security number or their ITIN number. So they can put either or. Date of birth and whether they're not a citizen or a permanent resident. So do we need their green card? So this is no longer on page 3, it's actually on page 1. So alternate names, and if they're a US citizen, page 1. First thing we need to do. Then we need to know, are they applying for credit individually or are they applying for credit joint? And if they are, how many are going to be on this application? So, and each bar intends to apply for joint credit, they need to initial here. So that's definitely different from where we were. The next section is fairly similar. Married, separated, unmarried, number of dependents, ages, home phone, cell phone, work, all that's relatively about the same. Email. However, we come into current address. 30 years in the making, great update. No primary housing expense. And if they are renting, it no longer goes on page 2, it's on page 1. How much are they paying for rent? So if there's no primary housing expense, underwriting step number 2, what do you get from them? Can anybody tell me? I told you, even though you can't hear each other, I'm going to make you guys interact. So they have to get a letter of explanation, right? A LOX, an LOE, something to show what do they do? Why do they not pay any housing expense? Do they live with family? Are they temporary, displaced somehow? What are they doing? So, and then of course, if less than 2 years, and their mailing address. The one great thing about the new application is we have a ton of little check marks. So like I said, even though it's 9 pages and they go through it, if it does not apply, they're going to put it does not apply and it'll skip on. So it's going to be very interactive for them to go through quickly. So mailing address, if it's the same or if it does not apply, then you go there. So my next section is going to be under employment. This has changed, which is revamped to give us more information up front. The employer's information, same, no big deal. Position and title, no big deal. How long have they been there? And how long have they been in line of work? New to us, underwriting step number 3. I am employed by a family member, property seller, real estate agent, or property or other party of the transaction. So are they employed by anybody else involved in the transaction whatsoever? So where are we at? Number 3. So now we've got to get the explanation for who are they employed by and do they work for a family member? And most likely that's going to bring you to this next question. Are they self-employed? If they are self-employed, do they own more than 25% or less than 25%? So can anybody tell me why they need to know that information? Indemnity, okay, of interest issue, yes, for if they're employed. But ownership-wise, get K-1s, business tax returns. So if they are less than 25%, we could consider them regular W-2 versus the actual self-employed. If they're over 25%, then of course they're fully self-employed. We need the K-1s, business returns. So we need all income docs for them. And then if they are a family member working for a family member, 9 times out of 10, they're going to request to prove that they don't have any ownership in that business. Not always, but in most cases. So right up square on page 1 is base income, overtime, bonus, commission, military entitlements, and other. So the military entitlements is, well, the question, are they related to going to possibly create? Oh yes, the indemnity of interest, yes. So we're definitely going to have more conditions if they're related to any party in the transaction, or even if they are related to a family member. And that's where we went to everybody filling out the VOE. If you knew they worked for a family member, you always know someone else has to fill out that VOE, that the family member is not supposed to be filling out that VOE. So going to the gross income, we have the military entitlements can go here as well. So that's definitely a big deal. It's a change. Their gross income is on page 1 versus page 2. Are they working for a family member, real estate agent, or party of the transaction? 25% or more, something we always had to know during the process. Now we do. So they do have to disclose it though. So if they're not disclosing it, we're still going to uncover it. But now you can go to them and say, hey, we asked you these questions and you didn't answer them properly, right? So let's go over to page 2. So we got through page 1 really quick, so not too bad. So page 2, employer, business name, and then same as far as any additional. Now if we go to complete previous, nothing's really changed here. A little bit, I think it's a lot easier to read, to stick out your start date and your end date. So I think these are much easier reading. Check if they were self-employed. Now here's where we get into a little hairy ground for employment or income. Include all assets and credits below. If you don't know what these things are, your consumer's going to ask you. So read the 1003 and know what these things are. So one of the things is, oh, wait a minute, sorry, I skipped ahead a little bit. Alimony, automobile allowances, border income, capital gains, child support, disability, foster care, housing, or parsonage. There are going to be the applicant who's going to ask you, hey, Karina, do I qualify? What is a mortgage credit certificate? Why do I need to know that? So you will have to explain to them what that is. Notes receivable, public assistance, retirement. So it labels out these things instead of doing a drop down of what they can put on here for income. So definitely do you not think that some more applicants are going to ask you, am I allowed to claim this income? And so it says reveal alimony, child support, separate maintenance, or other income only if you want to consider it in determining the qualification. So if they want to consider it, they can put it down here. But you also have to understand each guideline, each program, to know if you can count these things at all. But they are eligible to put them all down or hit the box, does not apply. So definitely more underwriting questions right here. Anybody have any questions on the employment? Nope. Income? We're good? All right. Let's go over financial information, section 2. This goes into what we need to know. You know, how much money do they have in the bank? How do they qualify for this loan itself? What are we looking to get out of them? Checking, savings, money market, certificate of deposit, mutual funds, stocks. Again, it labels it all out for them. They're eligible to put it down here. Any assets, real estate they owned, proceeds from real estate, anything else. Where is this cash value coming from and how are they coming up with it? So we need to make sure that they do understand it and where it does apply to on this page. Liabilities. Revolving, installment, open 30-day, or leases. This part hasn't changed too much at all, or to be paid off at closing. The little button here has moved a little bit, so that helps. Can I assume that a co-borrower that is a 1C will have their other part of this? Correct. So is that what you're asking? So if you have 2 separate applicants, they will that's where you're going from 9 pages to 12. Yes, they will fill out more information. Liabilities, right here at the very bottom, we'll move on to the next section, which is the real estate. This gets a little tricky and a little hairy for some. So why I say that is, you know the property you own, right? So if you are refinancing, list the property you are refinancing first. Again, we got through all of page 1, borrower information, income, and assets, and we don't even know what they're trying to do yet, right? Purchase, refinance, we have no idea. So we come over to here. This would be your first thing. Are they going to refinance a property? It's going to go here. Property value, whether it's an investment, primary, second home, and then also any taxes or dues. New button here for us lenders here, monthly income they think they're getting on the property. Then we have our section for where you're to explain and tell them, even though you think you're getting $1,200, for the lender, we're going to calculate what you are eligible to use in qualifying purposes right here. So this kind of sticks out to them a little bit more, that we can show them the actual section is going to change on what they qualify for claiming rental income. If they have mortgage loans on these, or it does not apply. Now, one great section they've added here is FHA, VA, conventional, USDA. Just because we had someone own a property on our real estate section prior to on our current application, we would have no idea what type of loan it was unless it was on the credit report or their mortgage statement. Now they're going to tell us what it is. So that's going to be helpful there. Any additional properties, same information they got here for the current one. So again, we go all the way to section 3 before we know what they're even going to try and do. And most don't know. You're right, Robin. Most have no idea what type of loan they have, but hopefully it'll pop up the question so they do look for it. So we'll go to section 4. So now we get into what are we doing with this consumer here? What are we going to do? So they're applying for a loan, the loan amount, purchase, refinance, other, whether it's a primary, second home investment, or FHA second residence. And this always comes into play with everybody, and we'll get a little bit more into this a little bit down the road. So, but I just want you to recognize the FHA second residence, I was hoping they did take off and they did not. So, but they did keep that on there. Now, we get all the way to here to where they're going. The consumer's done great. They filled it out and they get to section 4.1, mixed use property. If you will occupy this property, you will will you set aside space within the property to operate your business? Oh, Lord. Are you talking to the consumer and applicant and borrower ahead of time? Someone said earlier, it's going to take a year to tweak this. It's going to take longer to tweak just this one question. So Lil says, say no always. So it doesn't matter what they do. Are they operating a landscape and business and they keep all their equipment in their garage? Gosh, Lord. So daycare facility, medical office, beauty, barbershop, yes or no? Great. Who does not work out of their house today? We have this word called COVID, right? So the correct answer is most likely going to be no. Do they have a business license registered to that address? And are they legally running a business out of that home? Now, that's just my opinion. You can, come up with your script and what that is. But, oh, yeah, that's a good question. It bleeds into CPA territory. But my answer is my question to them to probe them is going to be, do you have a business license? Can you legally operate this business out of your home? And the third biggest thing is, do you claim this money on your tax returns? So needless to say, they can claim the money on their tax returns, still not have a business license, and maybe still not be a legal business operating out of their house, or they could have all three, but check no. So in most cases, you're going to have, because of how they do their taxes, any type of side gig that they do they will most likely say yes. So loan officers on the call, the first thing you want to do is hone in on your application when you pull it over from your online system or talk to them and look at number 1. Be a big highlight there, because yes, that's yikes. You can get to pull it over, you can go over it, you can put it into processing, you can disclose it, it goes to the underwriter. The first step the underwriter is going to stip you for is what business are they operating out of their house, and you're going to be like, none that I know of. Well, yes, they put right here. So yikes. So manufactured, is this property a manufactured home? They'll start checking Pinterest for home sales next. That's pretty close. That's a good one. So is it a manufactured home? So most people know when their home is a manufactured home. Not all, but most do. So any other mortgage loans on the property you are buying or refinancing? Here's another little tricky one for the consumer, because they don't really understand. Like, are they doing an 80-10? Are they getting a 10% home equity line or a 10% second? Or what are they doing? Are they getting any other loans on the property you're buying or refinancing? So in most cases, it's not going to apply, but are they going to understand that it does not apply? Let me go back to one more question before we move on. So what if they say no, but they show office deduction on their taxes? That's a great point. I don't know if that's going to create a new underwriting step because it doesn't disclose it on the application, but it does disclose it on the tax returns. That's a really great point, Kathy. So I think that's why that's the number one question I'll be asking my people when I first talk to them. And then second is understanding that they do not and are not applying for any other liens on this same property they're applying for. Is the borrower filling this out with the LO help? Great question, Brian. Is they can do it online themselves, which is going to be so interactive and a lot longer that most people will probably end up sending their people to the online app. Now, the next question is, before it goes to underwriting or disclosing, that's where the LO help comes in, is to make sure that the LO is understanding what the borrower did put on there. So it has to be both, but it doesn't have to be. So think about your call center LOs. They probably just patch it through and it goes to the next stage real quick and never even look at it. So you definitely want to be in a position where you're going to be reviewing them. Rental income on the property you want to purchase. So 2 to 4 units. In most cases, not going to apply, but gosh, Airbnb. I have an in-law suite. So would Karina the borrower put on here, I love this property because I have an in-law suite. I'm going to be Airbnb-ing it out. Here comes another gig question, right? So the answer for me is no, but rental income on the property you want to purchase. It's a possibility that now they say I'm going to get a roommate and I'm going to get income off of it. Do you think that's going to bring up another condition? So 4B new seems confusing. What if the refi with a current subordinate lien? That's correct. I don't want to go into that too much, Lisa, but that you are correct. So if they do have another lien right on there that they are going to have to subordinate, they could check yes and keep that second lien open, and that's a really big deal with the refinances right now. But yes. But can you see where rental income on the property you want to purchase could come into play? We have more dual families living together than ever before, contributing to each other. We have more family members or roommates than ever before because people can't, live on their own all the time. So, and then we have more, like I said, more people. I have an in-law suite. I could be Airbnb now. We have more Airbnb than we ever have. So that one's going to get a little interesting too. Will 4C be shared with HUD for verifying landlord is complying with Housing Choice Voucher Loan Programs? So 4C, we're going to be going up here to 4. Oh, you mean for income-wise, Leanne? Will 4C be shared with HUD for verifying landlord is complying with it? 4C, now keep in mind, this is for the consumer applying. So it should not have anything, unless they are an investor itself, but it should not have anything to do with, it's only for qualifying purposes for the consumer that's qualifying for this loan to see if that income can be counted towards their actual loan itself right now. This should be mainly for investors, people with no rental history that are trying with Airbnb and will open up a can of worms to saying yes. So just yes, 22 cents, yes. So this is more or less for your 2 and 4 units. Example, and I won't go into too many because I know you guys don't want to be on here all night with me, but for today, even right now, I have a person buying a 4-plex and they're moving into the 1. Can we count the other 3 units for them for income purposes? That's rare, but it is a possibility. Unit number, current VA law says that if the landlord owns or has ownership interest in 4 or more rental units. Now, Leanne, that gets a little bit above my head because I don't do on the real estate side. So for this question is just going to be on qualifying for just this one property itself. So I'm going to answer no to that, but I definitely would love to talk to you a little bit more about it. And then Brian said on all these, use do not apply or check. Well, Brian, we can't control what the consumer does because again, some will apply and some won't, but this is definitely. So then we get into 4D. And Leanne, this comes into a little bit more too of maybe something that you guys would want to go over and talk about is grants, gifts. So community, nonprofit, employer, federal housing, local agency, relative, religious, nonprofit. So if you are a loan officer and you don't understand exactly what is out there in your community for your consumer applying, you need to learn now because it's on the application and they are going to ask you if there is anything out there that they can apply for or they can get. So your local housing authority, your first-time home buyer grants, anything out there, because it is asking them, are they getting any of these things? So they're going to ask us, are we eligible to get these things for them? So you do have to know your local market there. Declarations have been updated, which is really great. It asks a lot of questions that we do in the process of the loan itself too as well. Will you occupy this property as your primary residence? Yes, of course. And then if this is a purchase transaction, this is a new question for them, and we always have to ask this during the process if we do feel like there's some type of affiliation. Is this a purchase transaction? Do you have a family relationship or business affiliation with the seller of the property? So is anyone here related, or is the seller related to them, or any relationship or affiliated business with them? So that's brand new on our application. Are you borrowing any money for this transaction? Money for closing costs, down payment, obtaining any money from any party such as seller or realtor that you have not disclosed on this application. So keep in mind, any money that you have not disclosed on this application. If yes, what is the amount of money? So this is something you need to educate them to as well on. Have you or will you be applying for a mortgage loan on any other property, not the property securing this loan? Before closing this transaction, so do they have 1 or 2 applications out there with maybe 1 or 2 different lenders or with the same lender? And have you or will you be applying for any new credit? Installment loan, credit card on or before closing this loan that is not disclosed on this application. So we always tell them, don't go buy that car. Don't apply for a new credit card. Don't get that washer and dryer. I love that question too. Excuse me. Because it definitely brings out they should not be going to do these things, but we have to tell them they should not be going to do them. And then will this property be subject to a lien that could take priority over the first lien, such as clean energy lien paid through your property tax? So the PACE program, a lot of counties and governments have tax credit for you to go energy efficient now and solar panels. A lot of people don't realize is when they put solar panels on the homes, that is a lien that goes on title it also can come in first position prior to us putting the lien for the mortgage, or when you're going to refinance, you do have to subordinate that lien as well too, like you would a second mortgage. I won't go into depth there, but you definitely want to educate yourself on what your surrounding areas have ability and eligibility for them for the PACE program itself. Going into 5B, are you a co-signer, guarantor, any debt that's not disclosed on this application? Are there any outstanding judgments against you? Are you currently delinquent or default in any federal debt? This has always been on there for the federal debt, but I want you guys to really keep in mind right now with COVID, this is 100% something we should be looking at. Almost all student loans have been in forbearance forever. And some are, some aren't, but probably 90% of people's student loans have been in forbearance. I talk to them every day when I pull credit and say, as soon as that comes out, you guys have to make sure that you have your new agreement in place or your payment in place, because they could go into default really quick once we get through COVID and they are in a position where they have to start making payments on their student loans. So are you a party of a lawsuit in which you potentially have any financial liability? Have you conveyed title to any property in lieu of a foreclosure in the past 7 years? And within the last 7 years, have you completed a pre-foreclosure sale or short sale? That is a brand new one. That may come up in the future where it's definitely something that we're looking at with COVID and where the foreclosure rates and the short sale rates will be in the next 3 to 4 years. So for that, have they ever had a prior short sale? And have they ever been foreclosed on in the past 7 years? One thing I like about M is, have they declared bankruptcy within the last 7 years? And if they have declared bankruptcy, it does state now 7, 11, 12, or 13. So that's helpful information for your loan originator there as far as information. So any questions on this section here? So I've seen some D and E, love those. That's brand new, that's great. Affiliated business, are they affiliated to family members? Again, twice over during the application. Short sale wasn't on our application before. Let's see, what else we had? The chapter 7, 11, and 13. So wish a discharge date would be included. That actually would have been a great line for them to do. So definitely. So we're getting to section 6, the acknowledgement agreements. I don't want to read over them, but I want you guys to take a minute just to read, and I'm going to just skim through them a little bit because it is actually extremely important, the wave of the future. COVID kind of pushed us forward in the digital age, the e-signing, different things. So one of the things that's on here is in regards to the e-signing, and that's on 4, that they acknowledge that they are e-signing, and this is their e-signature. So that's definitely something that wasn't under disclosures before. Delinquency, that number 5, we're eligible to mark late payments if they are late as well. I'm going to go back to number 1. For purchase transaction, the terms and conditions of the real estate contract signed by me in connection with this application are true, accurate, and complete to the best of my knowledge. So they're also here going into another step with the transaction is actually being in position to say they certify that that transaction is accurate to the best that they believe. And authorization and sharing information. So for sharing information here, it goes who they could share the information with, the processors, underwriters, verify the data, and the consumer credit report. So if you take time to read this, you definitely can come up with your new script in regards to your e-signing, making sure that they understand the delinquency and how we would report them late. Another one is on 3 is property value, that we don't warrant the value of the property. Any appraisal or value of the property obtained by the lender is for use by the lender and other loan participants. The lender and other loan participants have not made any representation or warranty expressed or implied to me about the property or its condition. So definitely on the acknowledgements, it's a whole lot more that they should be understanding. And these are definitely something that you should be memorizing and going over with the consumer to make sure that they do and they are aware. Any questions on the acknowledgements and agreements? So go back through just a couple of questions here. I have a couple of disabled veterans who are eligible for tax relief. Is there a question on the application for tax relief? We're getting to a question, but not exactly that one. So I will show you in just a second. Any other questions? Is the bar authorized going to replace within the disclosures, do you think, given in section 6? No. So Lisa's asking, we get the bar to sign an authorization stating that they authorize us to pull their credit, to get their verifications, anything. Most of that's used for the third party, so it's probably not going to be replaced at all. So we're good with acknowledgements. Now here is 7. So it doesn't say exactly the exempt right here, but it does go into we haven't had on our application at all whether they were military service. So did you or spouse, now this is a little heartache for us originators. So did you or your deceased spouse ever serve or are currently serving in the United States Armed Forces? Just because they actually served and actually were deceased doesn't mean they become a surviving spouse. So that's going to be a little sore thumb. We are in a huge military area, and it's definitely a question we have to look up, but it's okay. We just have to understand what the program for the surviving spouses, what their eligibility is, and why, and you may want to freshen up on your VA guidelines, is what is a surviving spouse. So there's a lot of things that have requirements there. So usually it's deceased, killed in the line of duty. There's a lot of diseases that are on there now, possibly that they qualify for. And there's a few more others. So it's definitely something you need to brush up on. So currently serving on active duty with projected expiration date. That's a huge one, because until you get the LES, no one knows that they could be getting out or their expiration date is within the next 12 months. So we all know for VA loans, they have to be in for the next 12 months. So if they do the application and you have never looked at the application, goes into underwriting, your underwriter conditions you for the actual expiration date is because they put it on their application, but their LES says they're in for 3 more years, then why do they put it on here? So you can still get some questions in regards to that as well. Currently retired, discharged, or separated. Only period of service was a non-activated member of the National Guard. So, Leanne, it doesn't say here if they are fully 100%, but that is something that we should talk to them about. Every originator should be, as far as when they are exempt from the VA disability. And usually in most cases, when we pull their certificate of eligibility, it does say. So, let me go back up here real quick. We've got page 1, personal information, current employment. We've got additional employment, previous employment, income sources, assets, liabilities. We've got your financial information, your REO section, any real estate owned. We've got the property, again, doesn't come into play to page 4 of if we're doing a purchase or refinance. Gifts or grants. Declarations, additional ones. Acknowledgements is definitely something you need to look over in the military service. So we go into section 8, the demographics. So we changed the demographics last year, so it's been over a year now that we changed the demographic section. So they're eligible to mark as many as they would like on here. So we definitely want to make sure that they do know and they need to read that they are eligible to mark as many as they like. So I won't go into drastic on the demographic section. I think my workday will change from 14 hours to 16. I agree. Our easiest part is the originator. is going to section 9 and just putting our information down there. So a few more questions on that. And for you guys that want to stay on, we're going to go right into the lender loan information. So now we've got through the whole application. We know everything about the consumer that we need to know, whether they're involved, not involved, sellers, work for family, don't work for family, what's going on. Have they had a short sale? Do they know about grant funds? Do they have solar panels? Are they going to apply for new credit? Are they a member of the service? All these questions weren't on there before. So now we have a little bit of help with processing because the questions are on there. But if they run a business out of their house and they haven't disclosed it, could be a problem. So, or if they think they're going to Airbnb that house, could be a problem. So there are definite conversations that you need to have with them. So once we get through the application with the consumer, now it comes over to the lender side. And we actually have our portion that the consumer doesn't need to see in regards to us knowing what information is going to be on here. Community property state, the transaction of details, whether it's a conversion of a deed or land contract, a renovation loan, a construction to perm loan, whether it's cash out, no cash out, full doc, all these things were on our previous application that consumer had no idea what they were doing in most cases. Fee simple, leasehold, sole ownership, life estate, title will be held in. So Indian country, land tenure. So FHA, VA, conventional, fixed rate, balloon. So keep going. These are our details of transaction that the lender needs to know the consumer doesn't have anything to do with. So we want to make sure that we also are filling out our part accurately to make sure that they understand what they're doing. And then finally, page 3 of our application goes away. It's no longer on the consumer side view, and it goes just for us as the lender itself. And this is actually the details of transaction, the sales contract, all the dollar amounts that are involved in it, the seller credits, any other credits that are applied. So this actually goes to a whole separate section. So it's definitely helpful that these 2 pages of items have come off and the consumer doesn't have to go through them. So even though it seems like a whole lot for the consumer itself, I sent the link for you guys to download it. If you also go to that link for the Fannie Mae website for actually the application itself, you can actually go to 1, 2, 3, 4, 5. I think they've made it available for 5 different languages now. So Spanish, Chinese. I'm gonna go and look. There's like 5 different languages. I was just going over it the other day. And I do want to go to right here. Multi-language. Vietnamese, traditional Chinese, Tagalog, Korean, Spanish, and English. So they have interactive ones too, for which they're great practice. Yes. So definitely in position. Yes, Pina. So they definitely, now the question is, you definitely have to have your loan officers on staff who speak those languages to make sure that you can also translate, but they are available on the Fannie Mae site, and they should be available in your loan software system as well too. But if the consumer asks that they want to actually fill out an application in their language, we have 5, 1, 2, 3, 4, 5, 6. 6 now, including English. So 5 additional ones. So definitely helpful if you do have multi-language loan officers on staff. So again, nothing to be afraid of, all excitement to uncover all the processing that we're doing behind the scenes now up front. This goes into effect on March 1st, whether you like it or not. I'm excited about it. However, I know there's a lot of loan officers that need to brush up on it. Fortunately for me, I was on one of the advisory boards for some of the continuing education for mortgage loan originators 5 years ago in helping create this, and we got a good quick peek of it. So I've been teaching it for several years, understanding what goes into it to know how it can help you in the mortgage process is a big deal, but also for agents to know it is so much more important for the consumer to get in front of a loan officer and answer the questions. And there should be a whole lot less of did you know or these things being uncovered during the process that they should come up front. I can hand out this slide to you guys as far as email. If you guys did sign up, you can DM me on Facebook if you want a copy of it. If you didn't sign up, if you signed up, don't email us again. I will get it out to you. We'll send it out to everybody. But if you didn't sign up and you just happen to log on, we will send everybody a copy of the actual PowerPoint itself. Does anybody have any questions? Rosie, you're so welcome. I just wanted to go through it and understand not to be afraid of it and for everybody to really get a good vibe on what it looks like and how it could affect your business or how it could help your business. And I think it's definitely going to be time to actually help us and not hurt us. Anything else? Anybody? Everybody good? I think so. I mean, everybody want to stay on and just party with me? Um, so I mean, I'll stay on for a few more for some questions, some Q&A of anything else that you guys might think of, because I think it's a great deal that you guys get in front of your referral partners. I think it's a great deal to actually just start talking to the consumer about everything and just going over. And I would go through and take, print one down and go through it and definitely be in position to highlight everything that you think could be a possible question that you might get probed that you need to study more up on. And as I always say, study your craft. The more you learn, the more tools in your toolbox, the more you can actually serve your community. There is an unmarried addendum that needs to be filled out for those who are declared unmarried. Yes, there is. So yes, they fill out an extra 4 pages if it's 2 applicants that are applying together that are not married. I'll just hang on for a little bit more. Told you guys I wasn't going to keep you long. I've ran through it fairly quickly because I am a little bit, I have been a little bit more familiar with it. So I do want to stay on if you guys have more questions. I didn't see an option to add more employment information. It will. So when you go down to the employment information, there's, where we are. Just on mine, I only did the screenshots. Keep in mind, they're counting on 98% of consumers by the next 2 years filling these out online. So it's going to be very intuitive, and it's going to, it's going to still go really fast, 5 to 7 minutes max for them to fill it out, unless they start going in to add things. And then as they can add additional consumers, they can add additional employment. So it will allow them to. Do husband and wife need to complete their own application? No, they will complete, or they can do one application itself too. So, but it will be separate pages for some of them, yes. So on the COBAR, there will be another separate page. For a true COBAR, yes, there will be another separate pages for those. I didn't add them to the slide, but if you go to the link we sent you in Fannie Mae, you can actually pull up all the, let's see, the actual the bar information page, the additional bar information, and the unmarried addendum, the lender information, and the continuation sheet. All that is going to be intuitive on there. The continuation sheet, which Pina, I know you are like one of the only ones in forever that always use this continuation sheet. It is still there in the last that actually you can put any additional information or explanations. So even though you guys are having them write separate explanations, the continuation sheet is still eligible there, and they can put that all on the application itself. So anybody else have any other questions? I hope it was helpful for you guys. And again, I'll go ahead and send out the PowerPoint. And if you guys need any help or any questions, just don't ever hesitate to reach out to me. ccarter@cmsmortgage.com, and we will be glad to help you. I'll hang on for a few more minutes for a couple more questions, but thanks for hanging out with us tonight. What is the deal with the FHA secondary residence? That's a great question, Lisa. I think we should chat about that one offline because it can get confusing for some people. And why is it bold? You like that line. I don't like that line either. It's actually, just skip over it. It's on cheap. Right here. It's on section 5A2 as well. What type of property do they own? Primary residence, secondary residence, FHA secondary residence. It's on there twice too as well, Lisa. So I think that's definitely something that I voted to have taken off, but it is on there. Any other questions? I am going to put in the link. So I put the link in here for all the pages, and if you go to the redesigned Form 1003, you can see all the interactive forms there. All right, I'll hang out for a couple more minutes. Everybody's staying on, but I think we're going to be in great shape. But we have a year to work it out, but it starts March 1st, so we're less than 30 days out. If anyone doesn't have any other extra questions, nope. We good? God. Good luck, everyone. Talk to your people, understand what they are filling out, understand what it means to you guys and why they need to fill it out or why we need this information. And please study up on quite a few things. Maybe surviving spouse, maybe the FHA secondary residence, short sales, foreclosures,